What's going on? Welcome back to the channel. Today when I talk to you about McDonald's, they just dropped their earnings. I want to go over some of the absolute key highlights from the earnings that you kind of need to take away. And then aside from that though, go over some of the data points and just where things might be going from here. Before we get into any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. So McDonald's did go up 4.8%, settling at $308 today. So pretty impressive stuff, although they did miss on some of their tentative key metrics such as revenue and earnings per share. Revenue came in at 6.39 billion, expected was 6.48. Earnings per share $2.83, expected $2.86. So not necessarily the best, but then again, even if you kind of look here, the expectations weren't all that great. So from analysts, there was 0 positive and 14 negative revisions leading into their earnings. Implied move though, as you can kind of see, was 3.07, so a little bit on the low end. So today was a lot more volatile rather than anything. So once again, at the end of the video, I'm going to go over all the absolute key highlights that you need to kind of take away from their earnings. But shorts, so I like to bring this up as more of a benchmark rather than anything, but 1.37% of the free float is being shorted, works out to be 9.79 million shares. Of course, McDonald's isn't a squeeze play, but it's good to analyze because shorts were starting to return leading into their earnings. So maybe they did feel that there was a good chance that they could beat, or better yet, even enough, give good future guidance. That seems to be what the market is all about right now. Moving over to options, 23 million in calls, 7.92 in puts, 58% of all the options being done today are optimistic in nature. And of the call options that were purchased, you do see consensus for it to be roughly around that $322 range. Bears are anticipating for it to be sub 295. So let me know your viewpoint on that. Where it did close at 308, it is trading between this R1 and the pivot. So $313 is going to be that next kind of key resistance / target point that you really want to watch for it to get over, at least in the short term. But these are all the ratings that did come out today. So you have a new all-time high rating at $350 done by Jeff from Barclays, who has a 56% success rating. Aside from that, you have 300, 305, 336, 312. All fairly good stuff, combination of buys and holds, good ratings as well. So Chris, Andrew, John, Sarah, Brian, and then, as I mentioned, Jeff. As a consensus, $323 is that price target, representing a 4.73% upside. So let me know your viewpoint on all of this. Like I said, I'm going to quickly go over the absolute key highlights from the earnings that you need to kind of take away from it and go over everything else. With all that, appreciate all of you watching. Don't forget to hit that thumbs up. And with that, let's get right to it.
McDonald's targets 46% plus operating margin in 2025, with focus on value platforms and market share growth. Earnings call insights. McDonald's Corporation, MCD, Q4 2024 Management View. CEO 𝗪𝗓𝗓𝗧𝗔 noted that 2024 performance fell short of expectations due to external challenges, including pressure on consumer spending and a food safety incident in the U.S. Despite this, he expressed confidence in the company's accelerating the arches strategy and shared optimism about recovery in 2025. He highlighted the company's efforts to strengthen value platforms, food safety measures, and digital initiatives. CFO Ian Borden shared that Q4 global comparable sales were slightly positive overall, with the U.S. comp sales down 1.4%, driven by the E. coli incident. He stated that sequential improvement in traffic was observed in November and December, supported by targeted marketing and value initiatives. The CFO discussed digital adoption, noting that loyalty program sales reached approximately $30 billion in 2024, with a goal to hit $45 billion in system-wide sales and 250 million 90-day active users by 2027. Outlook. Management expects full-year 2025 operating margins to be in the mid to high 40% range, surpassing the adjusted 46.3% margin achieved in 2024. This improvement is attributed to franchise margin performance and top-line growth. Global restaurant development remains a priority, with plans to open approximately 2,200 restaurants in 2025, contributing to over 4% unit growth. The strategy includes its 1,600 openings in the International Developmental Licensed (IDL) segment, with 1,000 in China alone. McDonald's is targeting slightly over 2% system-wide sales growth from restaurant expansion in 2025. Financial results: adjusted earnings per share for Q4 2024 were $2.83 compared to analysts' estimates of $2.86. Revenue for the quarter was $6.48 billion, aligning closely with analysts' expectations of $6.48 billion. U.S. comp sales were notably impacted by the E. coli outbreak, while international markets showed mixed results. Comp sales in the international operated markets, IOM, were slightly positive, with notable growth in Germany and Canada, but underperformance in the UK and Australia. The company invested $2.8 billion in capital expenditures in 2024, exceeding guidance to accelerate development pipelines and set up for future growth. Q&A. Dennis Geiger, UBS, asked about early customer response to McValue and its impact on guest count and margins. CEO 𝗪𝗡𝗘𝗧𝗛 noted positive take rates and stated, "We are pleased with how McValue is performing, with take rates aligned to expectations." David Palmer, Evercore, inquired about U.S. comp sales dynamics in Q4 and insights on IOM trends. CEO 𝗪𝗡𝗧𝗛 highlighted recovery efforts post-E. coli and noted mixed performance across IOM markets, adding, "France and Canada showed improvements, while the UK and Australia remain areas of focus." Sarah Senator, Bank of America, asked about the impact of loyalty and digital orders on overall check growth. CFO Borden explained, "Loyalty drives higher checks and frequency, with digital channels enhancing customer engagement." Sentiment analysis: analysts raised concerns over the ongoing recovery from the food safety incident and the effectiveness of value platforms in driving guest traffic. Their tone was slightly skeptical, but recognized management's proactive steps. Management maintained a confident tone in prepared remarks, with CEO 𝗪𝗡𝗧𝗛 emphasizing recovery and growth plans. During Q&A, the tone was slightly defensive when addressing U.S. comp sales and E. coli impact. Compared to the previous quarter, management's tone was more focused on recovery and execution, while analysts maintained a cautious outlook on near-term performance. Quarter-over-quarter comparison: guidance language shifted to emphasize recovery and stabilization in 2025 compared to the previous quarter's focus on mitigating ongoing challenges. Strategic focus evolved with greater emphasis on value platforms like McValue and a broadened scope for food innovation, including the Chicken Big Mac and Big Arch rollouts. Analysts were more focused on U.S. recovery this quarter, reflecting heightened attention to the E. coli impact, whereas the prior quarter included broader discussions on market share. Risks and concerns: management flagged continued headwinds from consumer spending pressures, particularly on low-income and family segments in the U.S. and Europe. Analysts expressed concern over the pace of recovery in the U.S. and the ability to sustain momentum in international markets, particularly in the UK and Australia. Inflationary pressures on food and labor costs remain significant, with limited pricing flexibility in the current environment. Final takeaway: McDonald's management expressed confidence in the company's ability to recover from recent challenges, including the U.S. food safety incident, through targeted actions on value platforms, marketing, and product innovation. The company remains focused on long-term growth, with ambitious targets for operating margins, global unit expansion, and digital adoption. Despite an uneven macroeconomic backdrop, management emphasized its commitment to executing its Accelerating the Arches strategy to drive guest count-led growth and market share gains in 2025 and beyond.